Happy Friday. Mortgage rates finally dropped below 7%. And the question is, with it being a relatively quiet economic news week, what fueled those moves? This week, we'll jump into exactly also bridge financing, what it can do for your clients. So let's dive in. First and foremost, what drove rates below 7%? And to be exact, 30-year fixed this morning, 6.96, down from last week, 7.04. And despite it being quiet on the economic news front, what propelled rates below that all important 7% mark? And it really came down to yesterday, we saw Treasury Secretary Bessent take to outlets, media outlets, and really quell some of the fears around Treasury issuance. And specifically that, hey, we're not going to do that, which was something that the bond market really liked, which ultimately helped continue this downward movement with mortgage rates. Second, Walmart earnings. Yes, Walmart is a huge multinational corporation. Earnings were reported yesterday, and it was a miss, which continues to spark this concern that, hey, the American consumer and consumers as a whole are feeling the effects of elevated rates and the inflation cycle. A couple other things. Jobless claims this week. We did see a rise in initial filings for unemployment. Keep in mind, this information dovetails into that all important Bureau of Labor and Statistics jobs report, which we'll get next month. But seeing an uptick in jobless claims, again, brings in concern of the strength of the labor market, dual mandate on behalf of the Fed, price stability, inflation, maximum employment, unemployment. We start to see gradual tick ups there that typically windfalls over to an improvement in mortgage pricing, which we saw here. Lastly, we saw the Fed release their minutes from their economic meeting earlier this month. And by no surprise, there was, nothing that stood out. It was just, again, more confirmation that yes, the Fed is in this wait and see moment where they want to continue to see the data come in to correlate with their goals around inflation coming down to that 2% target and employment remaining stable. So where again, it was a quiet news week, interest rates dropping below 7, hey, it's a room to celebrate, and we're going to celebrate. So let's continue to monitor this as, things that we're watching will be really the inflation report through CPI, which will come out again next month, and also labor. So the Bureau of Labor and Statistics, again, something we'll be continuing to monitor. And lastly, bridge financing. We continue to get so many questions about these, and it is an incredibly powerful product. And when I say this, it's not the bridge that we're accustomed to, which is incredibly expensive, almost a waste of time. There are multiple options, and it really awards clients the opportunity to buy before they sell, especially with what we're seeing right now, a lot of move down. Individuals wanting to cash in equity on their property and move to something smaller because kids have moved out, life situations have changed for whatever reason it may be. If you're running into scenarios where, hey, a client is, I need to move, but I don't want to do that until we've sold our home. And yes, my down payment is tied up in the property. We have solutions and we'd love to chat about it. So as always, let's make it a fantastic Friday and an even greater weekend. But we'll talk soon.